as a homeowner, the monthly mortgage obligation and that payment you make every month to your mortgage company is probably the biggest monthly bill that you have. So it makes total sense that people want to get rid of that. They want to pay the mortgage off in full. But you need to ask, does it even make sense to pay your mortgage off? And if you do determine that it does, what strategies, what techniques should you be using to have the most effective way to get that loan balance down to zero? Now, I've helped hundreds of people now go through this process, and in our lesson today, I want to take you through exactly what we look at and what you need to ask yourself to determine if you should pay off your home and what are the best strategies to do it.
Why is paying off your mortgage? Why is that such a common financial goal that most people have?
So if we go way, way back to when mortgages started in like the early 1900s, right? Banks could just take your house if you didn't make a payment on a mortgage. There wasn't foreclosure laws like there are today. Homeowners were not protected like they are today. So what ended up happening is in the Great Depression, we all know, was like the worst economic downturn in our country's history. During the Great Depression, a huge percentage of homeowners got foreclosed on. And when they got foreclosed on and came out of it, the people that actually had the harm done to them passed down, and we're talking constantly, the bank is the enemy. We got to get rid of that mortgage. If we didn't have a mortgage, they couldn't foreclose on our house. And this negative stigma got passed down to their kids.
What about some of the reasons? Why would someone not want to pay off their mortgage?
So the biggest reason why that you want to not pay off your mortgage, you want to keep a mortgage. And not only that, I'll take it a step further. Get the biggest mortgage you can get. So pay off a mortgage that's 2 or 3%, or invest in the stock market that's 8-9+%. Again, over the last 100 years, I don't care what happened in the last 3 months. We know it's a bloodbath. Now's time to be capitalizing on the opportunity. The other thing is cash flow needs. We all have needs for our family, education, paying down debt, medical bills, emergencies, things that come up. A mortgage isn't our only obligation. So if you put all your money into that mortgage and you have no mortgage on your home, but then a big expense comes up for $15,000, $20,000. So I think you're starting to see why I'm so passionate about not only having a mortgage, keeping it and growing that mortgage over the years. As your home value goes up, tapping that equity, utilizing it, and actually taking advantage of it.
So for those who do want to pay their home off early, are there common methods that are used?
The number one method everybody knows is additional principal payments. So that means paying extra on your mortgage. So if you have a 30-year mortgage and your mortgage payment is $2,000 a month, you want to pay it off sooner. So instead of $2,000 a month, you send the mortgage company $2,500 a month.
Is that good?
That's fine. That's just one way to skin the cat, though. That may not be the best way. So if you make an extra payment on your mortgage and you pay that end balance down or that principal balance, the next month your interest is actually going to be a little less than had you not made that prepayment. Of course, it depends how much you pay, but it will actually accelerate you paying off your mortgage, bring you further along that amortization schedule by putting on even a little bit of money. So if it's a motivating factor for you to pay your home off, even putting an extra $10 a month, that sounds like nothing, but that could make a huge difference. I saw an example which was $400,000 mortgage. I believe it was around 6.25%, and an extra $350 paid the loan off 7 years early. 7 years early, and saved over $130,000 in interest.
Talk about a few maybe unconventional or maybe even outside the box strategies to pay off your mortgage early.
So one method that is pretty much almost nobody knows about unless you've been listening to the show for a while. The common mortgage there is a money merge account or a all-in-one account mortgage. It combines your checking account, your savings account, and a line of credit or a mortgage all into one account. So when your money goes into that checking account, it actually pays the mortgage down. When your money comes out of that checking account, it actually increases the balance on the mortgage. The reason why someone want to do this is because if you're cash flow positive and you have a lot of extra money coming in each month, that extra money can go to pay down your mortgage debt without changing your cash flow. And when an emergency comes up, you have full access to that money. Last thing, Gary, on the unconventional methods of paying down the mortgage is using debt consolidation. So someone would say, how can consolidating my debt into my mortgage actually pay it down? Doesn't that mean the mortgage is going up?
Right.
Yes, it does up front. The question is, what are you doing with the money that you save?
Make double payments.
You could make double payments or just pay an extra couple $100 a month. If you're saving $1,000 by consolidating your debt, take half of it and put it on the mortgage.
What is a big mistake that people make after they have had, after they've had their home paid for?
I would say the biggest mistake that people make after that they pay off their home is that they feel like they've hit the jackpot, yet they don't have access to any of their equity. Another huge one is the reverse mortgage line of credit. So people think that I have no mortgage, I don't want one, and then they say, I need money for this, I need money for that. How am I going to get it? Take out a reverse mortgage line of credit. You can freely pay it and take money from it most of the time.
What questions should a homeowner be asking before deciding whether paying off their mortgage and if it's the best financial move?
Number one question you need to be asking when you're thinking about paying your home off is, am I maxing out my retirement plan? It's a yes or no question. If the answer is no, you shouldn't be paying off your mortgage. You should be maxing out the retirement plan. So that's number one. Number two, do I have other debt that's at a higher interest rate than my mortgage that I'd be better off paying? Again, yes or no question. If the answer is yes, that you have other debt, shelve the idea of paying off your mortgage, put all your effort to paying off the other debt, and once that other debt's paid off, then let's recalibrate, let's restructure, and let's re-strategize on then paying off the mortgage. Next thing is, do I plan on staying in my home for the duration of the mortgage term? And the last thing is, question to ask yourself, is my cash flow in a good position where I don't need access to the funds I'm putting towards the mortgage? Hopefully now you see that paying your mortgage off is not a one-size-fits-all approach. There's a lot of different things that we need to be looking at, and a lot of other places that your money may be better suited than paying that loan balance down to zero. So I hope you found value in our lesson today, and if so, go ahead and smash that bell, hit the subscribe button, like the video, share this with somebody else that may also find value in it who's interested in paying their home off. I do offer private personal consultations so we can drill down on you and your specific situation. So if I can be of assistance to you or someone that you know, reach out to me by call, text, or private message. 860-413-3938. As always, I hope that helps, and I'll see you next time. Take care.